Hi, everybody, and welcome back to video number 3 in Chapter 11. When we left off, we were looking to discuss the accounting and financial statement presentation for various types of intangible assets. There's 5 major categories or types of intangible assets. We have marketing related, customer related, artistic related, contract related, and technology related. So what are some examples? Trademarks or trade names, newspaper mastheads, internet domain names, non-competition or non-compete clauses or agreements. Those are trademarks or trade names. In the United States, trademarks or trade names have legal protection for an indefinite number of 10-year renewable periods. And just as a passing note of caution, it's hard to remember to do that every 10 years. I forgot to do that once, and we went 3 or 4 months before I remembered we needed to renew our trademark protections from the Patent and Trade Office, PTO. Nevertheless, it is indefinitely renewable for 10 years. We capitalize the acquisition costs, and there's no amortization of those. An example would be the Acctg company. It acquires a trademark that costs them $3 million that helps the company to better identify and distinguish one of its consumer products in the market. The trademark has a remaining life of 8 years and is renewable at a minor cost every 10 years. Numerous internal studies have indicated that this trademark will provide substantial cash flows to Acctg for an indefinite period. What entry should it make in its first year? Very easy. It should record the trademark with a debit for $3 million and credit cash to pay for it. The trademark is considered to have indefinite life and therefore should not be amortized. The trademark, of course, should be tested for impairment yearly using the fair value test. Okay, customer-related intangibles. This includes customer lists, order or production backlogs, both contractual and non-contractual customer relationships. Here we're going to capitalize the acquisition cost and amortize to expense over its useful life. Here's an example. Green Market acquires the customer list of a large newspaper for $6 million on January 1, 2025. This customer database includes names, contact information, order history, and demographic information. Green Market expects to benefit from the information evenly over a 3-year period. Record the purchase of the customer list and the amortization of the customer list at the end of each year. What journal entries would you make to record the purchase of the customer list in the first year and the amortization over the 3-year period? In this case, the customer list is a limited life intangible that Green Market should amortize on a straight line basis. Green Market records the purchase of the customer list and the amortization as follows. Here, our customer list was $6 million. We paid cash for it. That's an easy journal entry. And then we think it's going to last 3 years. 2025, 2026, and 2027. So we divide that $6 million by 3, and we're going to amortize that customer list each year for $2 million amortization expense here, and reduce the customer list. Again, we could use accumulated amortization, but it's rarely done that way. So as indicated, the customer list has a limited life, and therefore it should be tested for impairment when there are impairment indicators using the recovery test and then the fair value test. Artistic related intangible assets. Some examples include plays, literary works, musical works, pictures, photographs, video and audio-visual material. The copyright is granted for the life of the creator plus 70 years. So Michael Jackson, who owned the rights to Happy Birthday and who died 2 or 3 years ago, would have 70 years from his date of death that his trust or estate would be able to hang on to the Happy Birthday song. In any event, what we're going to do with copyrights here is we'll capitalize the cost of acquiring and defending it, and we'll amortize it to expense over its useful life. Here's a couple of examples: the Walt Disney Company and Mickey Mouse, the name. All right, a copyright example. Alonzo purchases a copyright for $500,000, which has a remaining life of 40 years. An examination of the future cash flows related to this copyright indicates that it will have a useful life of only 25 years. What journal entry would you make to record the purchase over what period would you amortize the copyright? All right, so the journal entry, we're going to debit copyrights for $500,000. That's what we purchased it for, and credit cash to pay for it. It has a limited life, and the copyright is going to be amortized over 25 years here, not 40 years, even though its remaining life is greater than 25 years. If the carrying amount of the copyright is not recoverable, then the impairment is measured based on the fair value test. All right. Types, contract-related intangible assets. And some good examples. Here's the NFL logo, Toyota's logo, Marriott, Fat Fox, and Subway's logos. Examples of these include franchise and licensing agreements, construction permits, broadcast rights, service or supply contracts. A franchise or a license with a limited life should be amortized to expense over the life of the franchise. The franchise with an indefinite life should be carried at cost and not amortized. Okay, a broadcast license example. A WWKI acquired a broadcasting license with an 8-year term from the Federal Communications Commission. The cost of the license was $400,000. The license may be renewed indefinitely at a minimum cost. The license has been renewed 3 times, and recent analysis indicates that the license will continue to generate cash flows if the license is renewed. What journal entry would you make to record the license, and over what period would you amortize the license? So we paid $400,000 for the license. We'll debit licenses and credit cash. Pretty straightforward there. But the broadcast license is not amortized because it is expected that the cash flows will continue indefinitely. The license is tested for impairment annually using the fair value test. Okay, technology-related intangible assets. Here we have Merck and Qualcomm, and these are patents, technology, and trade secrets granted by the PTO, U.S. Patent and Trade Office. I've dealt with them many times. Patent gives the holder exclusive use for 20 years. We're going to capitalize the cost of purchasing a patent. We're going to expense any R&D costs in developing a patent. Now, we're going to expense those R&D costs, not capitalize them. And we're going to amortize over the legal life or useful life, whichever is shorter. So, an example of patents here, Harcourt incurs $180,000 in legal costs on January 1, 2025 to successfully defend a patent. Underscore successfully. The patent's useful life is 12 years, amortized on a straight line basis. How should Harcourt record the legal fees and the amortization at the end of the 2025? And the solution is that Harcourt will make the following entries to record the legal fees resulting in a patent and their amortization. So we're going to record patents of $180,000. That's pretty easy. Debit patents, credit cash. And then to record the amortization of the patent, we're going to take the 12 years of useful life divided into 180,000, and the amortization expense will be 15,000, and we'll reduce patents or create another account, accumulated amortization for 15,000. All right, so if I summarize all these intangibles, they give you some examples and how we account for it here. And I think we will quickly look at that. The accounting for marketing, there's no amortization if we treat it as an indefinite life, which is usually the case. Customer list, will amortize those over the useful life. Artistic creations will amortize the useful life, which is typically shorter than the legal life. And if it's a contract, we'll amortize if it's a definite life, but we will not amortize if it's an indefinite life or perpetual life. And lastly, technology will amortize over the legal life or useful life, whichever is shorter. Okay, disclosures. Here, the Harbaugh Company, no relationship to Jim Harbaugh, I'm sure. They have intangible assets here of 3,840,000. You'll notice it's in thousands here. And the amortization expense of 380,000 and impairment losses to goodwill of 46,000. So they show a note. Charlie here acquired intangible assets, and they break down all the amortization of trademarks, customer lists, and others, etc., and show the estimated amortization period going forward. Okay. Notice that's a future estimate in that case. Okay, here we have the Sky Company, organized in 2025, and it's going to provide you with the following information. It purchased a license for $20,000 on January 1, 2025. The license gives Sky exclusive rights to sell its services in the tri-state region and will expire on July 1, 2033. Number two, they purchase a patent on January 2, 2026 for $40,000. It is estimated to have a 5-year life. Number three, the costs incurred to develop the exclusive internet connection process as of June 1, 2026 were $45,000. The process has an indefinite life. And on July 1, 2026, there's legal fees for defense of the patent totaling $11,400 and R&D as of September 1, 2026 is 75,000.